Welcome to another episode of That Crazy Triangle Guy. Here we are looking at Bitcoin US dollar index on the daily time frame, and zoomed way out like this, you barely even notice this little pullback here that we're having. What I think is a big bear trap. Now, let's look at the worst case scenario first. We have our series of pink parallel channels drawn out here, and as you can clearly see, okay, first of all, bear with me because I dropped my phone the other day, so my screen is all cracked, and my touching movements may be a little effed up. So here, since October, when this rally started, September, October, you can clearly see how we've traded in these channels right up here to the center line. You can see how we've made steps up here and interacted with the bottoms and the tops and the center lines of these channels here very clearly to where we were at today. I also have the daily Gaussian channel pulled up here, and you can see we had this long run here and then a pullback into the channel. Now we're having another long run, and I think we have a little ways more to go. Anyway, that's what I've been predicting before a pullback into this channel once again. Now, worst case scenario here is that we come down to, see, this is where my touch thing's messed up. So I just got to watch my cursor, not the white dot on the screen. So we come back down here to about 62.3, 62-ish, 1 maybe, to the bottom of this pink parallel channel that we are currently in. This is the worst case scenario that I can see right now. That would bring us into the daily Gaussian channel, and we continue to chop sideways here until we hit the bottom. This green dotted line is my representation of the daily Gaussian channel. So then we would continue to chop sideways through the halving in this area between our previous all-time high from 2021 and like 62,000. Now, that kind of doesn't make sense because April's supposed to be green, May's supposed to be red. And I believe that the parabolic bull run will start in June, where I have this green vertical line. The blue vertical line over here is the halving event. So that's why I'm leaning towards this being a bear trap, and that we do bounce here and continue upwards. Because I want to, in a moment, present the bullish side. So that's the bearish side. We would go sideways from here through the halving, down to 62 to 60, 68. Because if we fall into the Gaussian channel, okay, stop. If we fall into the Gaussian channel, price action's going to look like this. What we had back here. At minimum, it's going to be, we would trade sideways in the top portion of the Gaussian channel for an extended period. How long was this? This was from January 13th until, almost a month. and then you would see a big rally in May, which seems kind of backwards. Now let me switch my chart around here. All right, I've removed those pink parallel channels and I've replaced it with this purple parallel channel. Now we are back all the way back. We've gone back in time to summer of 2023 just to show you where this purple parallel channel goes. It starts all the way back here in June, almost a year ago. And you can see the interaction here, the interaction here, interaction here on the center line, as well as right here at the bottom of this dump. And then clearly you can see how we traveled right along the bottom of the channel here, trying to hold it as support and resistance, as well as here. And then clearly acted as resistance here before we finally broke through it. Center line right here acted as resistance before breaking above it. Let's, God, this is so hard to do with my effed up screen. Oh, well, I guess I can, well, I'll leave the Gaussian channel on for now. But clearly you can see how the center line has acted as resistance here, and here, and here. And we held it for support briefly up here. Then we went up to 73 when we initially broke our previous all-time high. So currently, I believe that this is about as low as we're going to go. Maybe about 64, 100 possibly. Well, yeah, could go all the way down to 64. 64, 100. I think that's as far down as we go. And we avoid entering the Gaussian channel, which is currently down at about 61.4, 61.5. So that's a few $1,000 above the Gaussian channel. And I think that's as low as we're going to get today. If we do, you can see that we did. There's only this one candle wick that comes all the way down here. I think most probably we do come all the way down there. You know, you got to believe that it's inevitable. If we are going to bounce, at least we have at least like a 1 minute period where we wick down to there and then bounce. But you can see we do have other daily candles that don't get as well. See, like for example, this one right here. Let me turn off the Gaussian channel because yeah, obviously that's a red candle. So like if this was Tuesday, if this was today, we came down here and didn't hit the blue line and held up here. But then the next day we did come down, wick down to the purple line, and then recover all the way back up. And probably that's what we're going to do here. If this candle just doesn't suck all the way back up today, then tomorrow's most probably will. We'll have a nice big green candle all the way back up here, and then probably continue on the rest of the week and maybe see some shorts finally get liquidated. Had a nice bunch of longs liquidated over the past 24 hours or so. So that's the more likely scenario, I think. And that way we avoid this Gaussian channel, which is estimated by this green dotted line here. And we continue onwards and upwards into the halving. And note that once we bounce off the bottom of the purple line, we at least come back up to the center line here, which is around 70, just say 75, $75,000. And more than likely continue on then finally up into the upper portion of this purple channel. Now, previously, we only got about halfway through that upper portion. So if we did that, that would be up around, well, if we did that going into the halving, we could get into the mid to upper 80s. I believe, though, that we would come all the way up to the top part of the channel, upper $80,000, and then see a pullback. So anyway, I see us going into the $80,000 range, heading into the halving, and then at that point is when we would see this pullback. For those guys, see this pullback into the daily Gaussian channel, and that would be at the end of April and into May, and that makes a lot more sense with how traditionally the market cycle works. So just leave it there. Keep it short. If that was short, it seems probably long. And if you do not have this on at least 1.5 playback speed, then it probably is very, very long, and you're probably dreaming right now. You're probably sound asleep and dreaming. The other thing is, well, we have the DXY up here. I noticed that the DXY did have a big day yesterday, continuing upwards. I just happened to click on this, getting to where I wanted to go. And, over the past month, the DXY has been rallying upwards. So that does put some pressure on the market, but you can see that we are back down below 105. So that's good. Possibly see a reversal here, and see how we kind of just, this looks like it would be a good spot for a reversal on the DXY. Just kind of taking a quick glance at it, which would also be a reversal in the downtrend on the other markets, like our market. So what was I doing? I'm going to FBTC. First of all, I want to look at the short volume on FBTC because this supports what I'm saying. Now, you can see the short volume here. There we go. Over the past few days, hasn't really increased much. And you have to remember that the short volume, this is representing the volume, which increases or decreases with the general volume traded overall in that day in the underlying asset. So short volume hasn't significantly changed, which leads me to believe that this move wasn't anticipated by, traditional finance, this pullback that we saw after market hours yesterday, that they didn't see it coming or they weren't planning it. Now, if you look at the volume here, you can see that the volume down here is pretty much in line with the short volume. So there wasn't really any signal there that all of a sudden the Wall Street was shorting the hell out of this, and that's um, that they saw this coming or that they're doing this. This is I it, I really think it's just a bear trap. I think we're going to reverse very quickly here from this and see a significant rally upwards, and hopefully catch some of those bears off guard and get them liquidated. So the reason we want to look at this, oh, I have to switch to a different chart. Hold on. Here we go. We got to have my purple lines. So you can see we have the pre-market trading right now. And today would be right here. So we've already come significantly down here. And pretty much the close yesterday with Wall Street close at 1 o'clock was, time, it's all relative. 1 o'clock where I'm at, and 2000 UTC. So the close of the US market at 2000 UTC was about the same as the close of the crypto market at 2400 UTC. They're both around 69,690 ish. Yeah, like one was 80 something, one was 90 something. So pretty much within 10, 20 bucks of one another. So when we're taking measurements here at our end of days, they're essentially the same. So we want to measure our move downward from here to where we're at now, to where the so that's about 6.45%. 6.5% down already. We came all the way down to the bottom of this purple channel. Oh, that would be 11%. That's crazy. Yeah, that would not be good if we came all the way down there. I mean, it would still be okay, but that just looks really bad. But if we did come all the way down to the bottom of this purple channel, most definitely we would see a bounce coming back up here. But if we did come down to the center line of this channel today, that would be about a 7, maybe even a little more than a 7.5, 7.75% move to the center line of the lower purple channel. And I think that's probably as far down as we're going to go. And if you can see all the way to the left, that keeps us above that doji wick on the far side of the screen on the left, and above these other candle bodies here in the middle. That's probably as low as we're going to go, about 7.5%, let's say. Wait, if that. No, where was I? Oh, yeah, there I am. Yeah, not even 7.5%. Maybe 7.4. So that's looking at the FBTC chart. Now we have to go back to Bitcoin. Let's just do all this while you're here. We want to load a different thing first of all. Let's load this one. And then we want to What are we on? We're still on bit fidelity. We want to go to here. That didn't take that long. So, if we were measuring down 7.4% from here, remember both market closes were about the same. We measured down 7% from there. See, that gets us down to the purple line here. See, when those things, mesh up together, then that leads me to believe that that's what's going to happen. I think this is as far down as we go, and we're going to bounce here. This is just a bear trap, just like right here, where you had this long wick down, and then the next day was a big wick up. I mean, a big wick. Big candle up, big candle down, big candle up. Same thing here. And then hopefully we can continue the rally up to these little question marks and arrows, the stuff that I drew up here. I still believe that's the case. All right, like, subscribe, and see you next time.